Okay, so we're live with OneSoft Solutions, and we will wait a couple of seconds for everyone to populate before we kick it off. Okay, so I think we can start. Welcome to the Sidoti Microcap Conference. Thank you for joining us today. And next up, we have OneSoft Solutions. I'm Anja Soderström, an equity analyst here at Sidoti, and I will be moderating this presentation. The presentation will be followed by a Q&A session, and you can submit your question via the function at the bottom of your screen. And it's my pleasure to introduce Brandon Taylor, President and COO.
Thank you very much. Hi, everyone. My name is Brandon Taylor. I'm President and CEO of OneSoft. We are a SaaS software company focused on recurring revenue. Our solution, Cognitive Integrity Management, is a mission-critical enterprise-level solution that's in the oil and gas industry. There are 2.7 million miles of pipeline, oil and gas pipeline in the US. That's not aging very well if you've been watching the news. In 2020, operators made over 500,000 repairs to this infrastructure, and our mission as a company is to predict pipeline failures before they occur to save lives and protect the environment, and specifically with data science, machine learning. Today's our solution, and I'll refer to it as SIM mostly in this presentation, has been validated and deployed by 11 customers who are Fortune 500 and 100 companies such as Phillips 66, Consumers Energy, and we have a super major. We now have over 500,000 miles of subscription with over 250 engineers and users that use our solution to perform their daily jobs every day. Some key takeaways on this slide, if you want to look at the market cap here. Its market cap is 66.2 million, 7.4 million in cash, no debt, and high insider ownership. So our interests are very much aligned to those of investors. Look at the disclaimer standard. This industry is regulated by an agency, the Pipeline Hazardous Materials Safety Administration. So that's short for PHMSA, and that sits under the Department of Transportation. So PHMSA requires pipeline operators to run hardware devices called pigs. And I have a picture of one of those because I doubt very many people know what a pig is. And by the way, OneSoft doesn't build these. We take the data from these devices, but they have odometer wheels in them, array of sensors, and it's pushed down the pipe by the product, and it measures wall thickness, so looks for dents, anomalies, or other information. PHMSA requires that operators run, if you're a liquid pipeline operator, you have to run one of these every 5 years, gas every 7. Once that pig is done running down the pipe, they take it out. The pig operator then consolidates all that information. It's actually stored on that hardware device, and they deliver back to the pipeline operator, typically an huge Excel comma delimited file that the operator then takes, and an engineer there will open it up and then look and see when they ran it previously, and then they'll try to manually compare these files. And typically we see a lot of legacy systems. The majority of operators use Microsoft Excel, and it's a complete manual process. And as you can anticipate, even after decades of following and trying to optimize this process, there continues to be on average 1.7 releases every day in the United States, right? And as a result of this, PHMSA has really had to step up the regulatory requirements, and they just planned to release in 2020 of July. COVID delayed it, but they have a new rule coming out called the Mega Rule. And this really mandates that operators adopt a more comprehensive data management solution, just like our OneSoft SIM solution. So it's provided a little bit of a tailwind behind us from a regulatory perspective. And it's important if you look at just generally in the market that in 2020, gas operators had 509 leaks, liquid a little over 4,500. And if you look at just the average 3-year running, we're approaching the $1 billion range from just the cost of these pipeline incidents. And given that most of the pipeline infrastructure is, was installed pre-1970, we don't think that the industry can achieve this objective of what they say push for zero pipeline failures without solutions like SIM that leverage machine learning, advanced data science, cloud computing, and all of the things like that. I think it'd be a perfect time for me to show a demo on our solution and how we address that workflow that you saw from the previous slide. So here you can see our solution's a cloud-based. All an operator needs is a browser, a modern browser, Edge or Microsoft Chrome. And really the objective here is they're able to drop data into our solution and then pretty quickly get to actionable intelligence in the fraction of a time. So that months is literally moving into hours. They'll be able to do that. We organize all of this data through dashboards. We help them prioritize and fix the issues within these anomalies, make sure they're digging the right things, those type of things. And then just to kind of, this is going through a demo, I'll give you a sense for, we just finished what one of our customers called the Pepsi Challenge with, where they have a data convergence project and they are using SIM and they have another country division that's looking to move on and they wanted to compare processes. So as you see this, they dragged, each provided each other data. Our customer that's running this literally would drop the data in and then within one and a half weeks, they were complete with the process. That took the other country division 3 months to complete the process. So we have really good validation that when we say, this takes months, we've seen it just recently. What you're seeing here is that we provide a bunch of visualizations. So here's a 3D view. This is actually an anomaly of a crack, a dent, and corrosion on the pipe that have all interacted. And we give operators the way to basically drill into the data so they can see and analyze these. You can imagine there's millions of these threats or anomalies on pipes. That's where it is in the world. Our data science team has spent a lot of time looking for different patterns in the data now that we have it into our solution. You can see the pattern here. This is called potential despondent. So it's low-level corrosion. This is a real client's joint a pipe out in the real world. We've anonymized it. So that gives you kind of a sense on what the solution does. It's pretty high level. But you can see that from that demo that we're providing operators a pretty significant adoption of digital transformation, not only through just modernizing their digital processes, but the money that we're saving them. So for an example, we have a production trial process that we work with prospects. And today we're averaging, and we're actually showing on average that these prospects would save 3.3 million by replacing their current system with SIM. And what that really means is that they're able to run, less of these tools that you see, their minimum of 5, but some of them are running more frequently, so we can reduce that. They can do less digs. And if you saw the number was, over 500,000 repairs. So there's a huge number of digs, and some of them are in what they call high consequence areas. So they can reduce those. Just more efficient from a resource. And a lot of these organizations use third parties, so we can eliminate that. And then probably one of the things that's really significant is they can spend less time in audits with PHMSA. So you can see that that's really happening. Once they go to commercial with us, we're typically saving clients 10x over what they spend before what they were doing with SIM. And we have data that we're starting to track on that. At some point, we'd like to get to the point where we say, running SIM is going to save you X per mile within your operations as part of your digital transformation. One of the things that we have really noticed is that over the last couple of years, there's been a really significant uptake on digital transformation. And recent events such as like Colonial Pipeline, as I'm sure everybody has seen, is just adding more fuel to the fire. And we're really excited that one of our very first customers, Phillips 66, they've been around since 2017. Last year, they were awarded the API Distinguished Pipeline Safety Award, and they had 0 failures. And there's a link in this presentation that you can download and be able to see what that award SIM played a very significant role. We have been working with Microsoft. We graduated from their 2016, their very first machine learning incubator or accelerator program in 16. On a daily basis, we work over, with 50 account executives globally. And we use that team, that account exec team, as kind of an extension to our sales team. One of the things we did in the last MD&A was, and we have a link to that, is we really took the TAM and we broke it out pretty granular. If you want to look at the other, which is 119 million in the US, you can take a look at that. What I'm going to talk about today is the inline inspection. So this is the data that's coming from the pigs, and I'll talk about risk and the cathodic protection. But specifically, if we look at the ILI, our customers that we have today represent roughly about 8% of that TAM. So we're making really good traction on that. This chart shows you kind of our revenue trajectory. We would expect that, COVID causes some challenges. We finished the year 50% year over year on revenue, even during COVID. We expect that trajectory will get back to where we were pre-COVID. The most exciting thing that we did last month, if you didn't see that release, is that we signed an agreement with Cipher Technologies, a technology sharing agreement. If you're not aware of Cipher, they're a wholly owned subsidiary of Alberta Innovates. And they were originally industry funded through pipeline operators, and then government has since funds them. They've been working with industry for over 30 years. They've built risk models that basically help predict where risk pipelines are going to have safety issues around all kinds of different risk models. In this agreement, we're actually in process as we speak about taking their probabilistic risk models and embedding them in SIM. And we've got 2 of our customers that are going to basically be in our private preview as we go through that. So we expect this to be another source and start attacking this piece of the TAM. We've kind of documented what our kind of estimated revenue potential is within that. And then we've had cathodic protection. So this is this 25 million. We've released IP related there. Last year, we have operators loading data. We're iterating with them where we learn and create new features and functions. At some point, we're hoping to isolate and be able to build algorithms that is only applicable to this. And then that's a point we'd be able to start monetizing this. And if you look at this from a global perspective, the US represents about 60% of the market. So we extrapolated that out, and globally, it represents about a 428 million opportunity. A new slide we've included in our deck really talks about how this recurring revenue, the white line here is our total revenue. And so what this is showing is we've gone back to 2017 quarter over quarter. You can see the revenue, and it's a little lumpy. It's one of the things that we've been trying to work on lumping out, and I'll get into the blue line. But it represents our all-in revenue number. So, first year, which will include, one-time professional services, different things, and the subscription ARR. We've added the blue line, which is contract consumption. And what this really is we've taken our customers. These are typically multi-year contracts. We've taken the year 2, which is mostly the recurring component, that we've straight lined it and averaged it out over the term of the contract to basically try to illustrate that, in 18, we had about a bunch of customers, and then you can see the onboarding happen, and then COVID hit in 20, and we're now in an uptrend again. Hopefully we'll be able to keep this, and it hopefully illustrates kind of, what this really represents is, we're almost at $1 million on an ARR, contractual, year over year. That chart should go up year over year. And then most excitingly is, we look at all of the stuff that's here, plus, our backlog, and, we're estimating that we're going to trend to cash positive somewhere in mid 2020. And so it really gives us pretty good comfort that we have sufficient cash on hand to fund the business. Another exciting thing, and remember, this isn't a COVID year. So last year, the blue dot represents our 11 signed customers, recently 5. And the green dots are new leads and production trials that we have going on around the world. And the majority of, so these didn't exist. This is new in the last year. We have a lot of activity, a lot of awareness, and we think a lot of this is coming from the fact that we really ramped up the marketing effort. If we look at our marketing and awareness, we created a bunch of white papers. We did a bunch of presentations with Microsoft, certain industry experts. a bunch of series on video guides to help people really understand what SIM's about. And then we got published in a major industry publication. So website increased dramatically, web generated leads dramatically. Typically we'll have 6 to 12 ongoing production trials, sometimes it goes way more. We're basically expecting to sign more customers as we complete these trials. Our production trial process is about a 3-week process, depending on how much or what's involved. And then we move into legal and IT. And those are the ones that are a little more unpredictable on how long those things take to cycle through. Last year, we had established an innovation lab, and mostly due out of necessity from just the demand of customers. I mean, as we onboard a new customer, you can anticipate, as in a lagging industry, there's just a lot of white space. So they see what SIM can do, and hey, can you help us with this? So we created this in the lab to help basically leverage and learn and see what algorithms we could help in other areas. So this is that test fast, learn fast, scale fast. And then if it proves out, it moves into SIM as additional AR, as well as we funnel our business development out of here. So all the inbound stuff comes into the lab. And we're really trying to basically figure out can we leverage our technology into other industries? Last month, we presented at our very first water and wastewater conference. Huge response, inbounds why we were doing the presentation, lots to follow up on and to discover. So we really started that journey in earnest. We planned on doing it last year, COVID delayed it. But what the lab's really trying to do is identify, prove out development of any new prototype solutions that are out there. And that can be in collaboration with Microsoft. We do it with our customers or just joint industry partners, these GIPs within an industry. And I'll like to leave you with a few points to wrap up. And one of the questions we get from investors, and I'd like to briefly discuss just this notion of, hey, what's pipelines? Isn't decarbonization going to eliminate this infrastructure? We believe that's still decades away. And if anybody, saw the colonial thing, there's an immediate need to maintain this infrastructure. And we think more importantly is that we're already getting industry starting to look at new uses for the infrastructure. So hydrogen, biofuels. To sum up, we think the opportunity for the company is, the progression of new technology is going to continue into this foreseeable future. And we're looking at other industries to apply that technology to. And, as a leader in the space, we're really building a competitive moat. It's a very sticky industry once your solution is adopted and onboarded and users are using it. And really exciting is that we haven't seen any competitors competing machine learning solutions in any of them. We see typically a lot of 20-year-old legacy solutions that really can't compete with SIM. And every year we've been going to one of the largest conferences since 2016. We still have seen no competition, nor have we come across any competitors in any of the production trials or any of the deals that we're in. So we're very pleased with that and the progress that we've made in 2022 or 2020. We got a lot of validation out in the market. We've conducted studies. You can read about those in the MD&A. White papers are continuous going out. We just released a paper on growth. And so if you looked at that international market, it's quite exciting to us that we were able to basically increase our sales footprint in the middle of a pandemic without ever getting on a plane, right? So we're feeling very encouraged about where we are from a backlog perspective, the production trials, all of that, continued support from customers and partners, full, strong balance sheet, we're well-funded. We think it makes sense as an investor to look at this as a long opportunity for growth. And with that, I think I've left 10 minutes here, so we should be able to take some questions. I was hoping to get through this, and I know that was fast, so there'll probably be some questions. So I'll open it up for questions. Okay, so we've got a couple. Could you update us on how the NonPig projects are going, whether it's have flu NonPig markets? So that's around the, just for everybody's benefit, is that the 2.7 million is the total miles. About 660,000 of it is what we can deem as piggable, meaning they can run those hardware devices. The rest of it is just non-piggable. And the way that they typically facilitate that is through cathodic protection, direct assessment. There's different technologies they can use. We released features within our solution last year to start loading some of that non-piggable data. And customers have been doing that. That's what we're iterating on. We're at the point where we're still waiting for customers to load that data, so then our data science team can start running that. And just to be clear, our initial take will be able to align that to this pig data, develop and learn from that, have operators go out and do excavations, and then be able to extract that learnings and create algorithms that are specific just to that data set. So we still have a ways to go before we're going to be able to monetize and build and make sure, because we need operators to go validate whatever we find from a data science perspective. So it's moving. We have customers loading data. We just need more of it so we can run data science experiments against it. Next question. What happens if a major oil spill happens on a pipeline that your software said was in the clear? Who is liable? We're a tool that aggregates data, and we really have no SMEs, subject matter experts, nor do we give guidance on any of this. Our operators in our agreements, we have no liability. They use our tool to basically help them identify and then do the engineering work to go determine what to dig and what not to dig. So we have no liability from a leak perspective. Are there any, here's another one. How long are the contracts when renewed? Yeah, so our contracts typically average 3 to 5 years, and then do you renew, negotiate pricing? So we do. A typical contract would have a normal escalator around CPI in the contract. But as the contract comes new, especially our early, the very early people, as we start bringing them on board, we'll bring them, we've added new functionality. We'll bring them back up to closer to suggested retail price. And so we renegotiate on down. With success cases like Philips, why aren't more customers 20 adopting, and what's holding them back? Yeah, we'd like to answer that question ourselves every day. It's generally, initially, it was awareness. 3 years ago, it was cloud. That was new. Remember, digital transformation. 4 of our 5 customers, in case you're new to the story, we were their very first cloud solution, the entire enterprise, right? So that's now in motion. Microsoft's really helping drive that with us, and they're starting to see the benefits. Awareness is now pretty global. There won't be anybody who doesn't know OneSoft, OneBridge within the industry. So then it becomes a production trial process, which we have a lot of those in. And then we get into the normal IT. We have to go through IT conversations. Is it secure? Again, these colonial type situations help us, because if there was any company that was onboarded with our solution, the only way that ransomware attack could have happened is if they were inside the Microsoft data center. So those help us from an IT perspective, but we have legal we have to go through, and then just the normal budget cycle. As you probably witnessed in 2020, oil took a pretty big hit, and they're still, quite frankly, coming out of that. People, retirements, all that kind of normal stuff. So we believe we have 11 customers. Once we get up and double that and then triple that, we'll just become, and that's one of our core objectives as a company, is to become the default integrity management solution in the industry, and turn the equation as, why aren't you running SIM? So lots of reasons that we could spend a lot of time on just the industry in general on, it's slightly different than a B2C model. It just takes time to get to B2B. Next question is, will current customers pay more for new functionality? So when we go back to that TAM chart and we look at that next TAM related to risk, yes, and that's in the MD&A. I think we're forecasting roughly $20-25 a mile. Don't quote me on that, but basically what will happen there is we convert one of our customers to use that functionality they would pay in addition to their original subscription. we have a balance between just core SIM functionality and iterations from a normal SaaS perspective on all this new stuff, to really delineating between what's big enough to basically go and add additional value on top of from a monetization consumption economic perspective. Risk will probably be the first one that we really go attack our existing customers with. We have more questions. We have maybe a few minutes left. And if I didn't catch all of your questions, maybe just chat it again, and I'll try to go a little deeper on it. Let's see. I think we got one more. I got to scroll down maybe. Do you see any competitors with customers and prospects? We don't. I touched on that slightly. We've been in the software business for a long time, and it was very in our previous businesses, you'd go into a deal and there'd be like vendor A, B, and C, and vendor A does this feature. How do you do that feature? We have yet to see that. When we go into deals and we do these production trials and we're using their data in our system, it's basically comparative to what they see in ours compared to what they do themselves, whether that's Excel, using third parties, etc. So we don't see any competitors in our space still today. Do most customers try out, move on to onboard? The conversion rate. To date, we've had really success on that. We don't share the exact numbers, and not that we are aware of that we've actually straight out lost. Typically what will happen, and that's happened in I think our third customer. We did a production, this is years ago, production trial with them, went dark on us for 6 months, came back, signed up. Right, so there happens to be a tendency of budget cycles are significant and kind of where they are within other projects within there. A lot of these operators are doing data convergence projects. They're buying other pipeline operator, trying to integrate all this stuff. So lots of moving parts, but we have a pretty successful conversion rate. Once they do a production trial and get through that process, we get a lot of verbals, and then then they go dark, and then 2 months later come back and say, okay, we're ready. So but we haven't really published on kind of what that looks like outside. Okay, let's see, one more. Does your product have a limited life if pipes are on the way out because they have no social license? So I tried to talk about that on the decarbonization model, right? We think there's this infrastructure, it took years to get in, and we think they're gonna basically find alternative innovations are gonna happen around biofuels, hydrogen, all of that they're gonna need to maintain this. New pipeline is where the social licenses happen. So, if they can stop having releases and, and all of those PR nightmares that we see, then we think we can help them with that. Then they're going to get more leniency from regulators to put new pipeline in the ground. So we think we're actually helping them build back that social license, and they'll find a need for that infrastructure. How do you see support costs scale as you onboard? So our solution's pretty self-driven. We have an account team of 3 people, and that's mostly for onboarding new customers. Our support is support at OneSoft, so they're pretty self-sufficient. In fact, once we do train up operators, we typically don't hear from them unless they run into some issue with the solution. We've had some operators, we do 2 hours training, they go off, and next thing we know, they've loaded 100 logs kind of stuff. So and we're working on a brand new user experience, mostly around the self-service component that we're hoping to start kind of get in place, so we can start looking at the smaller operators starting in H2 and start building private previews and all of that. So pretty self-sufficient once they get into the solution as a true modern SaaS solution. Okay, so I think Phillips 66 has been using our solution since 2017. They joined us during the Microsoft incubator, gave us their data, and then they went live in January of 17. that's probably the most time for the last. I don't think we have any time left for any more questions. So thank you all for attending. If you have other questions, please reach out and we can do a one-on-one and get into sessions. But thank you, appreciate your time.
Thank you, Brandon, and thank you everyone who participated. Have a good rest of your day.
Thank you.